Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel. I did finish the week with 15 wins and 6 losses for a win rate of 71.43% for the week. Definitely below my weekly goal of 85%. I've taken a loss every day this week. It's just been a very, very crazy week. Just a lot of weird fake out stuff been happening all week long. So, I mean, not every week is going to be perfect. I'm not going to be right every day. I'm not going to be right all the time. People just have too much high expectations when it comes to trading, that they think that you're never going to be wrong and every play is going to be 100%. People like that shouldn't be trading because that's not realistic. No one's ever 100% right. If I knew which plays were going to go 100%, don't you think I'd pick those plays instead of the ones that chop us to death? I mean, people that think like that, I just need a reality check. So, with that said, yeah, it annoys me when people just think that every play is going to be huge. And so, yeah, that does annoy me. But anyways, with that said, trade ideas room on Monday the 26th, I said, let's see, SPY puts under 507. You can see it was had a high up here on Friday, and the low was right around the, 507 area. So drifted down after close, and it was flat through Sunday, and it was rising a little bit Monday morning, throughout Monday morning and pre-market. So I was thinking, okay, if we break Friday's lower day, we're probably going to end up dumping. So first 10-minute candle was green. I was not interested in calls. So I ignored it. Obviously, it didn't make new higher day. As soon as it made new lower day, I grabbed puts, which is part of the open range breakout or breakdown. I wait for the first 10-minute candle to form, especially if I'm looking at the put side and it drops. I go at it. I go after the puts, but sometimes I'll switch and go the other direction. Depends on the opening candle and what it looks like, but I'm pretty upfront at what I'm looking at. I tell people in the room what options I have open and what I'm looking at before I take it, so people have the chance to have it loaded and take it if they want. You don't have to take any play that I take. I'm just sharing my journey, my trades. You can do what you want and take it with a grain of salt. So first 10-minute candle was green. I was not looking at calls, I was looking at puts. As soon as it broke new lower day, I grabbed the 50-90 puts at 780, and they went from 780 to 1050. So definitely happy about that. Then I took puts again at 1014, which is right here. Got this big red candle, and you get the inside candle right here, a green candle at the VWAP, rejected. Tried to get over VWAP, tried to get over up to higher day, didn't make it. It got quickly rejected at this 508.50 area, and tried to break down, but it didn't break new lower day. So it's not breaking out, it's not breaking down. It's just this is what it's been doing the first half an hour. This is exactly what it's been doing for like the last couple weeks. And I still take the open range breakout and breakdowns because, most of the time you do get one of these kind of moves, but sometimes, and not always, it happens. You get chopped to death, but that's just the risk with trading. So, so when it didn't break to 508.50, got underneath VWAP, it came back up. I waited for it to get underneath the two bodies of these candles. I mean, obviously you get the bodies of these two right here and this and this. So when it got underneath 508.10, I grabbed puts. I grabbed the 50-90 puts again at 820, and they went from 820 to 920 right there. Not much of a move, a dollar move. So the way it's been lately, you gotta take those dollar moves. The market just chopping, slow grinding, and you're just not gonna get much. So you gotta take what you can get. You gotta identify that the market is not going anywhere and take it. So then I took puts again at 941, which is right here. We got this play right here, came up the VWAP rejected, came up the VWAP rejected, tried to break new lower day. I didn't take puts right there. It popped up, got bought. Then this candle rejected the 20 EMA. So you can see the blue lines, the 20 EMAs are technically you could say it rejected VWAP, but also rejected the 20 EMA because it got shut down right there. And right here, it tried to get over it, got shut down. So when it broke new lower day, I grabbed puts again. I grabbed the 1590 puts at 770, and they went from 770 to 1320 right there. So it did play out pretty good. Then I took puts at 215, which is right here. Okay, see what I did here? You got the new lower day right here. I got these three red candles. Buyers came in, this candle wicked up, got a green candle here, and it pushed to 20 EMA, got rejected. And when it came back down, I was going to take puts underneath the, well, I did take puts underneath 506.50. I probably got it just a tad bit premature. And I got the 50-80 puts at 740, and they got bought up, and I just ended up stopping out at 3. So didn't work out. I thought for sure, because usually when it drops and you get 20 EMA rejection from a drop, you get new lower day. And right here, I mean, it didn't do it. It went up to VWAP. It didn't, then it finally did after what, a half an hour. And so I was thinking we were going to do the same thing. And technically we did. It pretty much did identical move where it rejected the 20 EMA right here, which we got it right here. Instead, it didn't break new lower day, got back up, and the same thing that happened right here. Then it chopped for a little bit, then it dropped. It chopped for a little bit, then it dropped. So basically identical moves. I just caught it here, and it just didn't work out. But I did catch it at 335, which is right here when it did break below. I think I grabbed it up here at the underneath all these bodies of candles. You get the body, the wick, and the wick. So when it broke below 506.75, that's where I grabbed the puts. I grabbed the 50-80 puts at 650, and they went from 650 to 780 in that little drop. Then it got bought back up, then it dropped. So identical moves. Thing is, hindsight's 2020. You don't know what the market's going to do. Normal in the past, when you see something like this, sometimes it would just rapidly dump, and you don't know if it's going to dump. You don't know if it's going to chop for a half an hour, for an hour, a couple hours, or if it's just going to flush immediately. You don't know that. Hindsight's 2020. It's always so easy to look at the chart after all said and done, and you say, oh, you should have taken puts there. You should have taken puts there. I really can't stand. You see people on YouTube and Twitter all the time posting their little charts and saying, you need to buy puts here. You need to do this here. You need to do that there. But the thing is that they're not telling you is that when they're putting out these plays, they're doing it on a chart that's already said and done. And it makes them look like they know what they're doing and that they're great and they got all the great plays. They know exactly what they're doing, but they're full of shit because they're posting these things after it's all said and done. And when you're playing it in real time, you have to make split decisions, and they're just not going to be always right. Sometimes the market just will chop. And what it does is it just likes to fool you. It will chop for a little while, then it will just flush on you. Then it will start flushing quickly, then it will start chopping. The market's been really difficult to read, especially the last couple weeks. So, yeah, it's always easy just to look at the chart after the fact to see all the great moves. And then you see all these idiots on Twitter and stuff and FinTwit just making it look like they're the greatest thing ever, and they're just they're full of crap. I wouldn't trust anybody like that. Never trust a trader that has a job. If you see a trader that works, don't trust them because they're not making money. Because if they were making money, they wouldn't have a job. So plain and simple, never trust a trader that has a job. Well, with that said, so one loss on a Monday. not the greatest. Got faked out, obviously, from right here. But like I said, to me, it looked good. I mean, I'd take it again. I probably should have waited. I probably got a little too prematurely. I probably should have got it down here a little more, but I did. Sometimes I like to buy it before it gets to the break point, because sometimes when it gets to the break point, you get these nasty candles like right here, and and if you catch it after the break, you're buying $2 or $3 after the fact. Instead, sometimes I prefer to buy it right at the break, or a few pennies or 10 cents before the break, and try to catch the implied volatility and the ramp up in price. But sometimes it bites you in the butt. But like I said, I mean, it dropped, came back up, rejected 20 EMA, quickly came back down. To me, this was a bear flag. This was another continuation drop, and it caught me. So it is what it is. I'm not going to be perfect. No one's perfect. So Tuesday, the 27th, traded his room, SPY puts under 505.50, which is, why did I choose 505.50? Oh, right down here, this low over here. First 2-minute candle is red, big red candle to say the least. Big red candle. What is the range on this? 506.73. It's almost a dollar range candle. So I took puts at new low a day on opening range breakdown. I took the 50-65 puts at $8, and they went from $8 to $9.30. This is how they like to trap you. They break low a day, and they'll quickly drop it, then they'll quickly buy it. So you gotta take it if you're gonna play these open range breakouts or breakdowns. You're gonna anticipate they're gonna be fake outs. I always anticipate they're gonna be fake outs, and that's why I get in and out. But sometimes they just keep ramping. But like I said, you don't know that. You don't know until after it's all said and done. It's gonna be a fake out, or it's gonna continue. So it is what it is. So yeah, I got the puts here, got a nice play off that, and then I took puts again at 10.11, which is right here. I think what I did was I grabbed puts underneath the bodies of these candles right here, and I grabbed them right at the 505.80 or 90 area, 85ish, right in that area. I grabbed the 50-65 puts at $7. Then it actually no, it opened up down here, and I took it down here, then it popped up, it came back down, then it dropped right here. So the 50-65 puts ahead at $7. I just stopped out at 6. It dropped right here, and I stopped out at 6 and got out. So I mean, it's a loss, very, very tiny loss, but still. To me, it just felt like it was just choppy. It was just not going anywhere. It's just been doing this all week long. Then it finally ends up breaking right over here. So, but I did take calls at 104, which is right here. I get this massive green candle. I think I took it when it came up over 50. Maybe where'd they go? They went for 104. This is 1 o'clock. Now the open here. So I probably grabbed it right in here, right above the 505. Not quite sure exactly where I grabbed it. I don't really want to mess with my chart, but if I had to guess, I think I grabbed it right over here, 505.30. But the thing that makes me scratch my head is that they went from the 50-65 calls went from $5 to $5.70. So yeah, I guess that's possible. It's not much of a run. It looks like a lot, but it's only 20 cents. So yeah, that makes sense. Yeah. So the 50-65 calls I grabbed right here went from $5 to $5.70. So big green candle right there, and it kind of rejected. And then I took, let's see, calls again at 230, which is right here. Yeah, the FU setup right here. this massive run up, this massive green candle, then you get the green FU candle right here. So when it broke over the FU candle at 506.40, I grabbed calls. I grabbed the 50.75 calls at 350, and then went from 350 to 420. To me, I didn't want to chase it here. You don't know what's gonna happen. It got to VWAP. It could have just rejected harsh, but no, it just ramped up. So I didn't want to chase it. I know that, if I bought it here and I'm buying an FU setup, I'm chasing it, but technically I'm not, because I'm looking at it from the point of view that chasing to me is when you're buying green candle, green candle, green candle. Then when you actually have a red candle come in, a big 10-minute red candle come in, to me that shows that that it's a pullback. You're getting some exhaustion a little bit. You're getting a little bit of cool down on the indicators. And that if it breaks over that higher day, or it breaks over that FU setup, that most likely it's going to be a trap for people, like thinking that, okay, the top is in, there's a red candle here, we're gonna reverse, and that's when market makers say, oh, not so fast, we're gonna rip it. That's why I call it the FU setup. So it's a big FU to everybody that thinks that the top is in and it's getting weak, and it's not, because it happens all the time when you have these massive candles. That it looks like it's getting ready to reverse and go the other way, and it doesn't. It continues. So that's why I call it an FU setup, is because it does do that. You get this massive green candle, the FU setup, which is this red candle. When I broke over to 506.40 for continuation up, even though it wasn't much, it got a little bit of a play. The FU setups work really, really good. They work the best on the first shot. So definitely happy about that. So we didn't get much out of it, 70 cents. So I'm not going to complain about that. So then on to Wednesday the 28th, SPY puts under, let's see, SPY puts into 504.50, which is down here at this low. First 10-minute candle's green. I was not touching it. We had this major drift down. You get a bear flag right here. Green candle. I rejected higher day. So I grabbed puts at right down here. I think I grabbed him down here, right underneath the 505 area. Because if I grabbed him right here, I would have sold down here. So I think I grabbed him down here at a lower day. I grabbed the 50, 55, puts at 650. It went against me. Then I ended up averaging down at 1014, which is right here when it went to higher day and rejected. So I added more at 330, making my new average 490. And it started to drop, then it popped, and I ended up just dumping it at 230. So not what I was looking for. So this day, I think, what was this? The 28th. There was news this day. What was on the 28th? Look back. 28th. This is the GDP was down. Yeah, we drifted down on GDP. SPY does this all the time, and it's so infuriating that you get news, bad news, and the market dumps. You get the most action pre-market. Then when we get to the market opening, we get chop, or it drifts up. And the market is just euphoric. It ignores every single bad thing that's happening. And it's happened before in the past. And when it does do that, it does eventually catch up. So the question is when. With that said, yeah, there's the loss right there. And GDP just totally ignored. So I waited, and I took puts at 1126, which is right here. Get the tail candle right here. When it broke below the 506.50 area, I grabbed puts. I grabbed the 50.70 puts at $5, and you got from $5 to $6.10 in that drop right there. Then I grabbed them again at noontime at 12:01, which is right here. So I think I grabbed them underneath the 506.50 area again. I grabbed the 50.75 puts at $7. At $7. And they went from $7 to $13.30 right there. So that ended up being a good play. It finally dropped. So that was definitely a good play. Okay, I had to pause the video in the middle of the recap because my son woke up. As you probably heard him in the last clip, that he was crying, so he woke up, so I had to stop for a little bit. getting back to hopefully where I left off. Let's see. I did the 570 puts. No, yeah, the 575 from 7 to 13, which was at let's see, 1201, which was right over here. The next one was let's see. Just trying to get back on the groove of this. I hate stopping and going back hours later. I had took the 5075 puts at 205, which is right here. I'm not quite sure where I grabbed it. I grabbed it at 5075 puts at 530, and then went from 530 to 11. So I must have grabbed them right up here, underneath the 50640 area, I believe. I think that's where I grabbed it. I'm not 100% sure where I grabbed this one. 205, which would be this candle here. So yeah, I must have grabbed it underneath the 50640. So yeah, the 5075 puts went from $5.30 to $11.50. So definitely a good play right there. Didn't break high a day. Made kind of like flat top, double top. Then it just collapsed. Next one was at 322, which was calls, which is right here. It didn't break low a day. It stayed in low above low a day. Did make a lower low right here, but it quickly got bought up. And let's see, I grabbed it, what, 322? Okay, I didn't grab it here. Big rejection candle. I think I was looking at puts underneath 505.40. I didn't break that, but yeah, it came back up. When it came back up, it took calls over 505.85, which was the body, and above the wick of this candle. So because it had such a violent rejection right here, and it didn't break low a day, because I actually was looking at it, not low a day, below this 505.50 area. Because it didn't break that, I didn't grab puts. It stayed above it, and when it quickly came back up over this area, I figured, okay, it's going to push through SPY. And that's exactly what it did. So I grabbed the 5065 calls at 460, and they went from 460 to 680 right there. So very, very tricky. This entire week just was very tricky to play. So if you struggled this week, don't sweat it. A lot of people did. I did. I didn't do that well. Just very, very crazy action. The market dumps. It V-rallies, or if it has bad news, it shrugs it off. And when the news and the price action just when they contradict each other, it makes you really think something's happening. So, but we've seen this before happen in the past. When this stuff does happen, eventually something does happen where it does manage to start making sense. But until then, the market could end up being crazy for days, weeks, even months, until something does happen. So traded Israel on the 29th. I did not have anything. It was we had this crazy run towards all-time high again, and it wasn't really, nothing really an area for me to call. It just was a parabolic move on news. See, the market, when it gets bad news, it dumps, then it fully recovers and V-rallies. And when it gets good news, it just keeps going. Except it did sell off a little bit here, but yeah, it fully recovered and kept going. So the market is just very chaotic. So first 2-minute candle was green. I was not taking calls after a massive run from 504.50 to a $4 run. I'm not chasing that. So I waited. Then finally it broke lower day right here at 10.10. That's where I took the next trade, which was right here when it broke lower day. I took the 50.80 puts at $6, and they went from $6 to $12.50 right there. So that ended up being a good play. And then I took puts again at 10.43, which is right here. FU setup, it had a big green candle right there, inside red candle. When it broke below the bodies of this candle right here, 507.30, I grabbed puts. I grabbed the 50.75 puts at 6.10, and they went from 6.10 to 7.30. It got bought up. then it finally flushed. I mean, this is just something that's been happening a lot lately. There'll be an area where it just keeps getting bought up, and it gets dip buyers confident that it's going to pop, then they flush it on them. It's just something that's been happening the last couple of weeks, I've noticed. So, got to be very careful and keep in mind that that has been happening and does happen eventually. So, the more time it tests an area, the more likely it's about to break it. So, even no matter how many times it gets a bot, it's still testing an area, and it did eventually fall through. But I mean, it could have here, it could have here, it could have here. You just don't know which candle. Goes back to what I was saying at the beginning of the video. Everything is easy when it's all said and done. Hindsight's 2020. So finally did collapse right there, but it quickly got bought up. I did grab puts again at let's see, 228, which is right here. I didn't quite get to high day, but I got to this 508.25 area, which is where this pre-market high was, and support was right here. A little bit rejection rate in that area. So when it broke below, I think I took it underneath the bodies of these candles right here, underneath the 507.60 area. I grabbed the 50.85 puts at 540, and they went from 540 to $8. So got a nice play out of that. Then I got puts again at 344, which was right here. I think, I'm not sure where I grabbed it. 344. So I grabbed it in this candle. So I grabbed the double top. I think. 344. Yeah, I grabbed that. I don't understand what happened here. I think this is one. I have to look at the exits. This is the one I had until end of day on the 29th. 353, which was this candle right here. So yeah, I bought it up here, double top, and then it popped more. So yeah, about the 50.95 puts at $4, and it popped more. Then I dumped it at $2 for a loss. I don't know if they ever went green or if I prematurely sold. I think I prematurely sold. I'm not 100% certain about that. I'm not sure, but if I bought it up here, I would imagine they would have gone green. Well, maybe not. It's only 70. No, it's $1 drop. Let's see if I go to SPX, see if that, which day was that? That was the 29th. So let's blow that up. Oh yeah, see, I didn't even go in the money. It was, well, I did go in the money, but it wouldn't have been enough. So yeah, that must have been one that, yeah, I probably stopped out right at the low. But anyways, yeah, I stopped out at 2. So another loss, a day. I took a loss every single day this week. Except Friday, I took 2 losses. I just, this was crazy. Bad news again Friday. I think I don't remember what it was. Unemployment claims or something like that. What was it in the morning that dropped this? 5 in the morning. Well, Europe had their CPI. I don't know what. I don't know. Something dropped right here that it started to rise up, and then it had a fake out right here for the long side, and if they take puts, I took puts at 940. So as soon as it broke lower day, I grabbed puts right here. Well, traded Israel. I'm getting ahead of myself. Traded Israel. I said puts at 507.50, and this low right here rised up, and all the bad news happening. And this week, I definitely was not looking at calls. Plus, it looked like a bear flag to me. Fake out and never broke high day, broke lower day. This is when I took the puts. I took the 50.90 puts at 790, and they went from 790 to 880. Not much there. And Nvidia and the Qs just took off. This was just unplayable. I did not want to play this. It just kept going. And I think if anything was worth playing, it would have been this flag right here. or maybe this FU setup, but from here on out, this thing is just too dangerous. It was too dangerous for the call side, too dangerous for the put side. But yeah, like I said, you just bought put calls here, you would have been fine, but you don't know it's going to do this. It could have just slammed right here. It could have slammed right there. Or we could have just chopped sideways here. We could have chopped sideways here all day. We don't know it's going to do this. Anyone thinks that they knew that this was going to happen is full of shit and they're lying. Because no one knew that this was going to happen. The algos just kept running it up. Qs just kept going. Just the Qs and NVIDIA, just the AI sector, just semiconductors just kept going and kept going and kept going, and the Qs kept running. And funny thing is that the Qs had more range than SPY did, which I don't think that's ever happened. If it has, it's very rare because usually SPY has more range than QQQ. But not this day. This day, QQQ, look at this. All green candles up. 440 to 446.50. So that's a $6.50 run. I mean, look at that. I mean, you can't short this because you don't know what the top is. And there's no top when it's going crazy like this. And unless it's like a big round number like 450 or 500, maybe they will have a little flinch a little bit. But when it's going crazy like this, there is real no top. So you either join it or get out of the way. And I wasn't joining it, so I got out of the way and stay out of it. But yeah, $6.50 range versus SPY that was $5 range. So yeah, $6.50 to $5. It's just crazy that Q had more range than SPY. I just showed you that it was really crazy in the tech sector, and I wasn't touching this. I just didn't like it. I didn't want to chase it. RSI was too high, too much bad news this week. This thing just keeps going parabolic, and I didn't want to know part of it. So you can trade it all you want. You can do whatever you want. If you want to chase these things, go for it. Go chase it, but don't expect me to. I'm not going to trade what you want me to trade because I will never do that. I'm only going to trade what I like. That's just the way I am. That's the way it's going to be. If you want to take crazy risk and chase this thing to the moon, then go for it. Go do it. But when you chase things like this, it always ends badly. The market will get you conditioned to chase, then they'll chop it the next day, or they'll chop it for a couple days, and you get used to scalping and taking pennies. Then they'll run it like substantially, then you miss a huge move. That's just how the market's been doing. It just plays you. It plays you like a fiddle, and you just get to deal with it. Plain and simple. The other one I took was I took SMCI, which I've been doing on Fridays. I did not do that well on Friday with it. Let's see what I do. Friday. This was because they got added to the S&P 500, but we'll ignore that. First one is I took puts at 10:04, which was right here. I had this massive green candle, inside candle, red candle, and when it got below, I think I grabbed it underneath the bodies of these candles right here. I grabbed okay, wait a minute, I'm getting ahead of myself here. Okay, I didn't take that yet. I'm looking at SPY, okay? Ignored that whole thing right there. So yeah, the first play of the day was this right here. They went from 790 to 880, and this is where I took the mistake at short SPY at 10:04, which was oh yeah, I remember this. I think I took it underneath the bodies of this candles right here. The 5090 puts at 740. Yeah, I took the puts right here because the candle opened here and it dropped. So I took puts right here. The 5090 SPX puts at 740. It dropped, then it popped, and I stopped out at 3. So yeah, that was loss number 1 for the day. And this is where I was like, okay, I'm not touching this anymore. This is too crazy for me. What was this that came out at 10 o'clock? Was it the revised consumer sentiment? Yeah, revised consumer sentiment, which came in really low, really bad. bad numbers, and yet this thing just took off. It's just, I really hate when the market does that. It just takes off and doesn't care about anything. Big FU to the bad news and stuff like that. So hopefully this week will be different. But anyways, shorted it here and it popped, stopped out. Then I took SMCI puts at 1004 right here. No, not 1004, 1126, which was right here. No, right here. No, right here. I do remember this to get the double top. Then it started reject, and I took it underneath the bodies of these two candles and the wicks right here. So I liked that area. So when I broke below 912, I grabbed it. I grabbed the 900 puts at 550. It started to drop a little bit. It got up and it dropped a little more. Then it didn't go green. Actually, I think it went green once very, very quickly, and I didn't take it because I was expecting a bigger move. And it just slowly grinded down. But I was looking at it from the point of view that, you know, SMCI, this thing can drop $30, $40 in a candle, no problem. So it bounced some VWAP. I stayed in it. Came up here. I was kind of losing hope a little bit. Then it, you know, had this monster dump candle right here. Well, I mean, it's not a monster, but it's compared to what's been happening the last few hours of the day. So when it came to had that monster candle, came back to the VWAP, I was like, okay, here we go. We're actually gonna go now. This thing's gonna dump. Then VWAP get bought, went back up, dropped again, got bought, and then it finally got to 900, and it just didn't go green ever. So I ended up stopping out at $1.20 because I had them at 550 to 900 puts. So I was just holding, you know, I'm thinking we were gonna get a nasty candle. Then when it got back up, I was just like, okay. I mean, any other time we can see monster dumps on SMCI, and we just haven't. So I kind of held it hoping that we were going to get that, and it just didn't happen. So it is what it is. It was a risk worth trying, and it just didn't work out. So crazy week. Hopefully next week will be better. So that's going to do it for the recap. Thanks for watching.